Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As a reminder, the focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to help develop a thesis regarding expected trading range and volatility for the day and a directional bias. And the second step of my process is execution, and I look at real-time order flow in Bookmap and market maker hedging flow on Spotgamma Hero to confirm my thesis and for setups for entries and exits. And I think this process provides a significant edge, especially for short-term trading. And on topic questions and comments are welcome, and I will be watching the Options-Doug chat channel in Discord and chat in YouTube for your questions and comments. So again, questions and comments are welcome. Oops. All right, so let's get started. What I want to talk about today is some news items, economic data that came out this morning. Then we'll go through our positional analysis, and then we'll talk about setups. And if you have any stocks that you want me to take a look at, please post them in chat, either YouTube or Discord, and I'll try and look at those if we have time at the end. All right, so first of all, news to wrap up the week. There was a couple of big news items, especially this PCE that came out this morning. And here are the results. Consumer spending greater than expected and also greater than previous. The PCE price index month over month greater than forecast and greater than previous. And the same for the PCE price index year over year. And the core PCE, as well as the core PCE index year over year and month over month. So all of these numbers came in hotter than expected, and the market did react negatively to these numbers. So that was the 8:30 a.m. data. And then the University of Michigan Consumer Sentiment came out at 10 a.m. Eastern, and that was also better than previous and better than forecast, as well as the new home sales. All right, so that was the data this morning. That wraps up the week of news and events and data. And by the way, there was also there were quite a bit of Fed speakers out today. So that is the news for today. Now let's take a look at our positional analysis. And I'm going to start with the S&P 500. And before I dig into this chart, let's take a look at a larger time frame. So this is the S&P 500 chart, SPX, showing price and the key Spotgamma levels. This is again Thinkorswim showing price and key Spotgamma levels. and these levels are provided to Spotgamma subscribers in a think script that has to be updated manually every day. So that takes a couple of minutes. And I lost my pen tool. Give me just a moment. Okay, got my pen tool. So these are the key levels. Here's the 3900 level. That was the put wall yesterday, and the 3950 level is the new put wall. So the put wall increased from 3900 to 3950, and that level is in play today and has been acting as support. And there's also a combo 1 level at a couple points below that. So those levels have been acting as support. And then above 4,000 remains the key gamma strike, and that's also the volatility trigger. And I'll talk about what these levels are in a few minutes, what they mean. And then way up above here, the call wall remains at 4,200, so way out of play for the call wall. So that's a bigger picture. That's a Thinkorswim 20-day 1-hour chart showing the break of the downtrend, the consolidation, and then a break of the uptrend, consolidation, then a shift to a downtrend. All right, so that again, that's a 20-day chart. Let's take a look at a little bit shorter time frame chart, and then we'll dig into the Bookmap chart. So this is today. Again, a Thinkorswim chart, 1-minute chart showing today and showing the interaction with the 3950 and 3948 levels. One reason I'm showing this is just showing price and these levels. And these levels, of course, are the actual SPX levels. And in the Bookmap chart, this is the S&P 500 futures. So the levels are converted to equivalent ES numbers. The SPX levels are converted to equivalent ES numbers. So what this is showing, this is the Spotgamma cloud notes, again, that are provided to Spotgamma subscribers. And it's showing the key SPX levels. Right now, Spotgamma is still using a 10-point difference between ES and SPX, and that number is actually about 5 points. So I have noted this is actually the closer to the actual 3950, SPX 3950 level, and that was noted as support in the AM Founders Note, Spotgamma AM Founders Note. And then this is the L1. L1 means that is a large gamma level, 1 being the highest, 5 being the lowest. So this level of ES 3950 to SPX 3950 so far has acted as support today. And JC, we'll take a look at a SPY chart in just a minute, and that, the SPY levels definitely come into play too. So when you're trading ES, you need to keep track of the accurate SPX and SPY levels. Those options trades in those two instruments are quite often driving price action in ES. Okay, so those are the levels that are in play today. And again, note this level, the 3950 to ES 3950 to SPX 3950 has acted as support today. All right, and while JC mentioned it, let's take a look at the SPY chart. And those levels of support have corresponded to this 394 C1 level. So that's a combo 1 level. Again, 1 meaning it's the highest importance. Okay, so let's go back. We'll take a closer look at setups in just a minute. Let's go back to the ES. And just to point out what this column is, this is my own cloud notes. And I have here, since I know the exact, or pretty close to the exact difference between ES and SPX, I've marked those levels here. And I also have the big ES round numbers, the zeros in the 50s. And then if there was one of the major Spotgamma levels for SPY, I put those on this chart as well. So like the volatility trigger, the call wall, the key gamma strike, put wall, all those levels for SPY, I'll note on this chart, these columns as well. All right, let's talk about shifts in levels. And again, just like yesterday, there were very few shifts in levels. First of all, the SPX, SPY, and QQQ volatility triggers all did drop from yesterday. SPX from 40.25 to 4,000. And the volatility trigger is Spotgamma's gamma flip level with positive gamma above, negative gamma below. In a negative gamma environment, that means that traders are long puts, market makers are short puts, and they have to sell futures as price decreases to hedge their delta exposure. And that tends to increase volatility, and that's typical of a negative gamma environment. That's market makers' position on the gamma curve. So SPX volatility trigger has dropped from 4,025 to 4,000, SPY from 405 to 401, and QQQ from 300 to 296. And then the only other shift was what I mentioned before with this SPX put wall increasing from 3,900 to 3,950. And the put wall is the strike with the largest net negative gamma, and that can be expected to act as support as it has done more or less today so far. Okay, let's take a look now at the gamma charts. And we'll start with the S&P 500 gamma charts, and this is showing absolute gamma levels, and this will show you where those levels come from. So what this is, again, SPX, we'll look at SPX first, the absolute gamma levels. This is the zero line, this horizontal line, and above is positive gamma or call gamma shown by the black bars, and below is negative gamma or put gamma shown by the teal bars. So this shows that the 4,000 is very obviously the strike with the largest absolute gamma. That's the key gamma strike or absolute gamma strike. And then, as discussed, the put wall is at 39.50 now. And again, that's the strike with the largest net negative gamma that can be expected to act as support. And the call wall is way up here at 4,200. That's the strike with the largest net positive gamma, and that can be expected to act as resistance. And the key takeaway here is really the range of gamma. Significant gamma is between 3,900 to 4,100. So that's SPX. Here's SPY. So for SPY, 400, the key gamma strike, and that's pretty obvious, the strike with the largest absolute gamma. And then 390 is the put wall, again the strike with the largest net negative gamma. And the put wall, a call wall up at 420, again kind of way out of range here. So for SPY, the range is really of significant gamma, 390 to 410, matching up pretty well with SPX. All right, let's take a look at QQQ, and then we'll come back and look at something else on this page. So this is QQQ, again, absolute gamma for QQQ, and this is what we're looking at for NASDAQ. We don't look at NDX, it's not significant. All right, so for QQQ, the key gamma strike, 300, and there's the put wall at 200, and then the call wall at 310. And really it looks like the range of significant gamma for QQQ is about 280 to 310. All right, so that's QQQ. Now let's go back to the S&P 500 chart, and we looked at this yesterday, and we'll look at the data again for today. So this is open interest and volume. This is for SPX. This is for put data. And the black bars are showing volume. That's the volume traded. And the small teal bars are the open interest change. So note the difference between volume and open interest. So open interest are positions that are held more than one day. And then this is indicating that most of this volume from yesterday, put volume, is 0 DTE options that expired at the end of the day yesterday. So this is just looking at SPX. This is data from yesterday, and this can help to explain why there were no significant shifts in levels. Very little change in open interest, but a lot of volume traded during the day in 0 DTE options. So again, those were options that expired at the end of the day yesterday. All right, and also just to mention that Brent Kachuba, the founder of Spotgamma, posted a short video about this on YouTube yesterday. Anyone who's interested in this approach to trading, I highly recommend that you watch every video on the Spotgamma YouTube channel. Set alert, set a notification every time a new video comes out. I learn something every time from watching those. So again, he talked about this yesterday, and when we start looking at hero and setups, we'll dig a little bit closer into look at what he was talking about yesterday. All right, so that is the gamma charts, and again, just emphasizing the lack of shifts in levels could potentially be due to this focus and volume on 0 DTE options that have no impact on, or very little impact or no impact on trades that are held overnight. All right, so let's take a look at some data now. And as usual, I'm going to focus on gamma notional. This is market maker's position on the gamma curve. And in this left column, that is SPX. The middle column is SPY. And the far right column is QQQ. So you can see that they're all negative. So market makers' position on the gamma curve, looking at all these indices, is negative. And again, that means that market makers' position on the gamma curve is negative, and that traders are long puts, market makers are short puts, and if price decreases, they have to sell futures to hedge their delta exposure, and if price increases and implied volatility drops, their delta exposure decreases, and they can buy back their short hedges. So these levels did change from yesterday. So, and they all became less negative. So yesterday, SPX gamma notional was minus 606, and today it became less negative to minus 381. And yesterday, SPY gamma notional was minus 2116, and today it's minus 1752. And then finally, QQQ yesterday gamma notional was minus 714, and today it is minus 538. All right, so let's take a look at the Vanna charts now. And this is a graphical representation of what I was just talking about. And this is showing market makers' delta notional or delta exposure and how that changes with changes in price. So delta notional is shown on the vertical axis. The strike price is shown on the horizontal axis. And then this green curve is showing how market makers' delta notional changes with changes in price and changes in implied volatility. And that's the Vanna effect, the change in delta with the change in implied volatility. And what this is showing is that market makers' delta notional, again, in a negative gamma environment, increases as price decreases, and they have to sell futures to hedge their delta exposure. So they are trading in the direction of price, and that tends to increase volatility in a negative gamma environment. That's typical of a negative gamma environment. And then the black line is showing the next expiration, and that is the change in market makers' delta notional as time passes. And that is the charm effect, the change in delta as time passes. I'll take a look at SPY and QQQ, and then I'll take a look at questions. So this is just showing how this, I can look back the last couple of days. So this just shows, this is SPX, showing that slight shift to less negative from yesterday. Here's SPY, and also showing the slight shift. So the steepness of that line drops off just a bit. And then the same for QQQ. A little bit steeper yesterday and flattens out or just becomes less steep today. All right, let me check for questions. And you're welcome for the insight. So puts are likely to take profits at 39.50. Which would mean market makers rewind their hedges by buying future stocks. I'm not sure I understand your question. So market makers at 39.50 would need to hedge, and often traders will, they're aware of these levels, and we'll see with Hero that they will fade moves at these levels. So I guess it's possible that traders are if you're talking about traders taking profits, yes, most likely. So again, we'll see this with Hero, is that as price moves up, traders will start buying puts, and then they'll start to take profits at a key level like 39.50. and market makers are just hedging in response to what traders are doing. So if price breaks below 39.50, for example, market makers may need to hedge more aggressively, and we can take a look at the so you can see that. We'll go back to the absolute gamma levels. So as price moves down, let's say below 39.50, those puts at 4,000 and 39.50 are gaining in value. So market makers will have to continue to hedge that, and I talked about this a day or two ago in a Vanna feedback loop where those puts are in the money, they're increasing in value, and market makers have to continue to hedge as price moves lower. So it depends on what traders are doing right now, especially with the zero DTE options. Okay, I hope that answers the question. And Roomba, I suggest that you take a look at that. There's no easy answer to your question. Why do being short puts make it a negative gamma environment? Well, I guess that really there is a simple explanation. So what Spotgamma assumes is for the indices that, like SPX and SPY, assumes that traders are long puts, market makers are short puts, and on the other sides they are traders are short calls and market makers are long calls. So this is, I think, based on how traders and investors hedge their stock portfolios instead of buying puts for every single stock. A money manager may have dozens or hundreds of stocks under management, and so anyway, that is the assumption that traders are long puts to hedge their portfolios, and they sell calls to pay for those puts, and the market makers take the other side of that position. So that's where that negative gamma comes from. And there's another question wondering if there's a tool that shows real-time the gamma and delta added to SPX. And there is a tool that shows options trading in real time. And we'll look at that in just a minute. So yeah, just think about, again, short puts. So if you're short puts, you're negative gamma. So think of it this way. So when you're short puts, that's a positive theta trade. So that is you're making money as time passes, and gamma is typically the opposite sign from theta. So if you're short puts, you're negative gamma. And if you're long calls, that is positive gamma. Okay, thank you, JTT. All right, so let's move on now. We've looked at the data, we've looked at Vanna. So just based on this, based on the data that we looked at, the last thing that I don't know what, I just did something in my mouse. All right, the last thing that I look at is the key gamma strike for every stock on my watch list. And I show the previous key gamma strike. That's the key gamma strike from yesterday. And then I compare that with the current key gamma strike, the key gamma strike for today, again for the stocks on my watch list. And I color code these numbers. So here, for example, for Moderna, that means that that key gamma strike dropped from the previous day. And for NVIDIA, and that's pretty obvious since NVIDIA rallied pretty strongly yesterday, the key gamma strike moved up from 200 to 240. So overall, though, not a lot of shifts in this key gamma strike. So, I would interpret this from stock to stock, and for the indices, pretty much a neutral stance. Again, no significant shifts in levels, and again, I think the reason for that is the focus of trading in 0 DTE options has no impact on the longer term levels. All right, so let's take a look at some setups now. And this is the combined signal for SPX and SPY. Let's zoom on this. So this is, and we'll look at SPX and SPY separately. So first of all, this is just the total signal combining the 0 DTE and all expirations. So this is all expirations, showing again transactions in SPY and SPX. And I'm going to zoom in on the morning here. So the first thing, let's zoom way in. The first thing was, and what I'm looking at, and Brent talked about this in the video a little bit yesterday, how this can have a lead effect. So first of all, looking at right at the open here, the purple line, the hero line dropping, and then price responds a few minutes later, about 5 minutes later, setting up a short right after the open. And then we'll zoom out a little bit. And then the next setup, and this took quite a while to work out, was the divergence long setup. And again, that took quite a while to work out. Looks like over an hour, where price kind of did this final test of that ES 3950 to SPX 3950 level, and then begin to move higher. And while we're looking at this chart, let's take a look at the 0 DTE, and we can do that by checking the next expiry. So that's the 0 DTE, and we can see that it is following pretty closely with the all expiry. All right, so that is the S&P 500. And now this is showing the move lower just before noon, confirmed by Hero, and then a move higher just after it looks like about 1:15. So now let's go look at Bookmap. And JEC, that was my setup too, but I was traded a little bit differently. I was looking at 39.50, holding as support, looking at VIX, looking at implied volatility, and I put on a SPX broken wing butterfly, and I did trade SPY from the long side as well, but I was looking with an increase in volatility today to sell some premium. So here we can watch order flow, and this helps to confirm the trade. So let's talk about that long setup. And when I see something like that in Hero, and again I have one screen for presentation here, and I I have two screens and actually two computers. I'm on the main computer with two screens. I'm looking at Bookmap on one screen and Hero on the other screen, so I can watch. And um, once I see that divergence setting up, then I'll look at Bookmap, and I have the levels on here, and I'll look at potential reversal level, and I'll look for signs of reversal. And again, this took quite a while to play out. Let's zoom in a little bit, and you can see the shift. The quick move lower, the pink dots there, that's market sell orders, aggressive sellers. And then price consolidates for quite a while, and a lot of green dots start coming in. And looking at the subchart here, I can see that, first of all, this cumulative volume delta, confirming that order flow. So that is green dots, aggressive buyers, market buy orders coming in. And again, I know that traders are taking positive delta positions in SPX and SPY. And then also larger traders are buying with iceberg orders. Not in significant numbers, but there are some. I'm looking at this light blue line rising. And I can see this number increasing. See the iceberg buys here. And I talked about this yesterday, the way larger traders trade. They often will buy weakness and sell strength. And they're doing that again here, buying weakness. So that is step one. You see the divergence in Hero. Then you look at Bookmap to find your reversal point and look for signs in order flow for the reversal. And in this case, you just had to wait for the setup to come into play. And you see the signs of a potential reversal. Again, the cumulative volume delta shifting from bearish to bullish. Large traders coming in with iceberg orders. And potential support level, 39.50, that you expect to act as support. And then you just look for your point. And again, I took I guess a less exact approach and just putting on that broken wing butterfly in SPX. So that's the S&P 500, and we'll go back and take a look at Hero now. And let's take a look at the separate signals for SPX and SPY. And first of all, the really interesting thing to note, and I think it was this same as yesterday, this is the Hero signal shown here in this right column, and this is showing for SPX. This is the weakest that this signal has been in the last 30 days and the last 5 days. And I think it was just the opposite yesterday. And then for SPY, this Hero signal is the strongest that it has been in the last 30 days, which is shown by this entire slider region. And then the colored portion shows the compares the signal to the last 5 days. So for today, SPX, that's a weak signal, and for SPY, it's a strong signal. So just something interesting and showing that you have to really dig into this and look at everything. So we've looked, and for today, it was just easiest to look at this combined signal, SPX and SPY, and that it is working pretty well. So let's take a look at SPX now. And there's a strong correlation between SPX and price action. Let's separate out the zero DTE. That's shown by this teal line. Turn that off. So strong up and down correlation. And then for SPY, remember that's a strong signal. And this was definitely where that morning divergence came from. There's that divergence. And that began at the open and took almost 90 minutes to play out. And then there's a divergent short that didn't take as long to play out. And now it looks like SPY traders are fading the move higher again. All right, let's go back and let's take a look at the total signal for SPX and SPY. And not quite as drastic as the SPY signal, but it is shifting lower. And again, that is what a lot of what Brent talked about in the video. Traders selling highs, buying lows, and that action in SPX, especially, or the S&P 500, is leading price up and down. And he focused on the 0 DTE options. All right, so that is the S&P 500. And let's take a look at some other stocks. And just one thing that I want to point out, I have trimmed down my watch list so it all fits on one page here, so I don't have to scroll up and down. And these are the stocks that I trade anyway. And the other stocks are on my other computer that I look at occasionally. So these are the stocks in my watch list, just this single page here. I don't have to scroll up and down. So let's go just point out something. This big block trade here in Apple made it difficult to interpret. Talking about that vertical line there, no vertical line. So I just ignored that and moved on. And the next is AMD, and there's a strong correlation here between options trades, hedging flow and price action, and a nice divergence setup here in the morning with Hero trending lower. Here especially, price moves up, giving you a couple of good pullback opportunities for shorts. And then even if you are fast in the morning, seeing this first one here as Hero made a lower high. So let's go take a look at Bookmap now. Here's AMD. All right, let me take a look at questions. So it would be great to have a multi-chart stock layout of Hero. I'm not sure what you're talking about. Hero does provide 5 days of history. So you can look at the past 5 days all on one chart. And that is that's the extent of it. And yes, there are updates coming. And some of the updates have started already, have been rolled out. So Spotgamma Hero now has a dashboard that shows, and we'll take a look at that next time I go to Hero. And Carmo trades, which expiration did you use for the BWB? And I trade those long term. So that was the April monthly expiration. All right, so JEC says Apple made me walk away today and love trading Apple. Yeah, that's why I have all these stocks up here. If I don't see what I like in one stock, um, then I just move on. And um, I have stocks that I prefer to trade too. And if I don't have clarity in one stock, I'll just move on to the next one. So anyway, here's the setup in AMD. Definitely bearish order flow. And AMD typically does not have a lot of range. And there's the price target at the 77 liquidity. All right, so that's AMD. And the next one was Amazon. And there was also a large block trade in Amazon. And let's just zoom in on this right here. And we'll take a look at Hero for Amazon in just a minute, and we'll focus on order flow first here. So notice the shift from, and it's easy to see with this CVD line, the shift from bullish to bearish. And you can just see all the pink dots coming in, especially right around here as it breaks the opening print that's shown by this purple line, the point of control. And for stocks, that will typically remain at the opening print until the closing print. So the break of that, now let's go take a look at Hero. Just cleaning up a couple screens here. So that is AMD. Let's go to Amazon here. And there's that large trade, and I think this was easier to interpret. And it kind of obscures the rest of the signal because it's so large. And we can see that a large trader sold a lot of calls, and price was already falling, but it fell pretty sharply right after that. So you would have to be really anticipating something like that. Let's see if we can zoom way in. So we're looking at, so before and then there's really not a lot of clarity, and then that big trade comes in. And if you were just watching order flow, anticipating that, then you could have gotten a short there. All right, so question in YouTube, why do you follow QQQ instead of NQ? Well, first of all, if you're referring to options, QQQ versus NDX, the options market in NDX is insignificant compared to QQQ. And why do I follow, if you're talking about trading itself, why do I follow QQQ instead of NQ? I prefer to trade stocks. So I may trade ES, but I never trade NQ. It's just too big, too fast. I don't have a good, I don't think I have a good edge with NQ. I do with the S&P 500. Most of the commentary and discussion in Spotgamma is based on the S&P 500. So I trade the S&P 500, if I'm going to trade an index, almost exclusively. And I do trade QQQ, and actually there was a good setup in QQQ today that we'll get to. But I have I prefer to have the option of trading any number of stocks. So I have my stocks platform open, and Thinkorswim open, and Bookmap open, and that's enough. So I trade, right now I'm trading primarily stocks and options. Okay. All right, so the next one, let's jump over to, let's go to Microsoft, the same thing with these block trades here. So the same as Amazon, large traders selling calls. That's shown by this large vertical line, one big trade, then another smaller trade, then a little bit larger trade. Let's take a look at the total signal. Now let's go take a look at Bookmap. And there's a question in Discord, having several charts for different stocks with the same screen window. Carmo Trades asked, send that suggestion to Spotgamma. They like suggestions, so send that to them, and then ask me what role does VWAP play in your system, and not much. If I see a reaction at VWAP, that's just one more confluence, but I don't base trades solely on VWAP. Okay, so let's take a look at Microsoft. Go back to Bookmap, take a look at Microsoft. All right, so here's, let me zoom in on this. So short setup in the morning. So, again, we saw those large block trades. Trend lower. So here, for example, regarding the question about VWAP, you could take a look at this in, I guess, several different ways. First, I see the reaction at the 250 key delta strike, and an added confluence is that it's just below VWAP. So I do see VWAP trending lower, and that is bearish. But I'm looking at Hero, and then I'm looking at Bookmap, looking at bearish order flow, price making lower highs below VWAP, and a reaction at this 250 key delta strike, move lower. So there's the setup in Microsoft. All right, let's go to NVIDIA. All right, NVIDIA, as you recall yesterday, I did talk about NVIDIA at length, a long setup, and then why it stalled at the 238, 239 level. And today there was a pretty big shift in the gamma in NVIDIA. So this is the composite view chart and equity hub for NVIDIA, and note the put gamma that's shown in the light red color here, call gamma above, and you recall yesterday it was all put gamma. So this is showing call gamma above, and also 39.31% gamma expiring today. We could see a reversal in the stock. Look for support at 220. So this, I was looking for a potential call gamma unwind. And let's take a look at this put call impact chart. Here's the same note. And if you recall yesterday, this was put dominated. And I did not save a screenshot of the chart, but this was in the region. Yesterday's price was gapped up to the region where this level shifted or flattened pretty substantially, indicating a market maker's position on the gamma curve. They're indicating a shift in the rate of change of gamma to very low, and indicating that market makers' requirement to continue to hedge would decrease. And then today, things have shifted quite a bit to this call domination above 250 or 240 that was shown in the composite view chart. And notice all the shift in call gamma above these levels. So what I was looking for today, and I'm sure this gamma was all, just like this note says, 39% expiring today. So the way that works is traders have bought these calls yesterday, held them overnight, and as the day progresses, they will quickly start to lose value, and price will, market makers delta notional. So when traders buy calls, market makers sell the calls, and they have to buy stock. They buy NVIDIA stock to hedge their delta exposure. And as those calls lose value due to time, due to charm, market makers' delta notional will decrease, and they can sell back their long stock hedges, and that's a call gamma unwind. And that works if traders are selling their calls or not buying calls today. So you first of all recognize that this could happen. Again, we're looking at looking at these two charts in Equity Hub to see the call domination, see where the call strikes are, and also we're noting that there were, again, remember from my key gamma strike list, there was a significant jump in the key gamma strike, jump higher in the key delta strike, jump higher in the hedge wall, and a jump higher in the call wall, and a move higher in the put wall. So all these levels shifted higher, but again, that on the surface that is bullish, but all that gamma is going to expire today. All right, so let's go take a look at Hero now. We'll take a look at NVIDIA. And this is setting up both shorts and longs. Short in the morning with Hero dropping a little bit of a divergence there in the morning, setting up a short. And this is pretty typical price behavior of NVIDIA. Some chop after the open, but the setup would have been here. With Hero falling, and price makes that high and then starts to drop. And let's just see what traders were doing with puts and calls. So they were buying puts and selling calls. Let's zoom back out. So in the case of NVIDIA, I'm looking for short with any hint of traders selling calls. All right, so let's go take a look at Bookmap. Here's NVIDIA, and there's that short setup. Oops. Let's zoom in on the morning session here. So there's that chop, and you could approach this in a couple of different ways. If you were fast enough, catch this. I'm typically not. I'm looking for a break of this range lower as traders are taking negative delta positions. And then the first target is this 230 hedge wall and the liquidity there. So there's the setup in NVIDIA. If you could patiently wait through this chop, look for the break lower, and then that's good for 2 or 3 points depending on where you got in. All right, let's take a look at QQQ, and then I'll wrap it up. My time is up. And notice the 290 put wall in play today. And that was one of the keys here. So let's go take a look at Hero. Let's take a look at this. Go to the total signal. Go to QQQ. And in the morning, just like SPY, there was a divergence long set up. I'll zoom in here so we can see this a little bit more clearly. So here was the divergence long. Again, it took quite a bit of patience, but the key to this was that put wall level at the 290. So, if you were just reading order flow, you could, and watching everything else, take a short here with that 290 put wall as a potential target. But if you were just watching Hero and making your trading decision based on that, then here was a long setup anticipating the put wall to act as support. And it did, and it looks like traders were front running that just a bit. And you got just about a 2-point move up to the 292 C4 level. Okay, let me check for final questions. And JEC says, yeah, I should keep an eye on QQQ. So, yeah, I definitely do that. My setup today, the way I proceed in the morning, my planning and preparation, is I focus on the S&P 500 first and then QQQ. So I update all of these levels in ES first. So I note all the levels in my notebook, and then I update ES first. I update these levels, and then I go to SPY, and update these levels. Again, the C levels, and then QQQ. And then after that, and this does take time, and I may not get all this done before the open. So I want to get the indices right, get the levels right. Then I'll go to Tesla and maybe NVIDIA if it's in play, or any other stock in play, and then I'll mark up the other levels as I have time later on. So anyway, that's my planning and process, to focus on the indices first, and then the stocks that I like to trade on a regular basis. All right, so JEC asked if I get some time this weekend, might be useful to note how I convert levels between SPY, SPX, and ES. So what I do is I convert everything with SPY. So ES to SPY and SPX to SPY, and there are a couple of ways of doing that, and the more exact way is to look at two charts for comparison. So let me show, first of all, I'll have, again, I have two screens. So let's look at SPX, for example, on one screen. Actually, let me go back and look at a 1 day, 1 minute chart. And then on the other screen, I have a corresponding chart in SPY, for example. And I'll just compare a couple of high and low points, maybe 3 or 4 high and low points for the day, and then I'll come up with a ratio. And I did not do that today. I did that yesterday and came up with a ratio for SPX to SPY of 10.0155. And then I do the same thing for ES, compare two different 1 minute charts, and the ES to SPY ratio that I came up with is 10.0306. And I do that every day or two, really every couple of days. And there's another kind of quick way of doing that is you can just look at a watch list real quick. So I'm just looking at, and it's a little bit easier with, let's say, comparing ES to either one of those numbers, because it doesn't change as frequently. It's, you know, it's the tick level. It's not every 0.01. It's 0.25. So the tick level. So I see 67 there, and I quickly jump down and look at the look at what the SPY number was. If I just want to, you know, take you know, a quick look, quick check on the number, that's how I do it. And then you can do the ES to SPX also. So here you can see this is for, and just calculating it. So that's 68. Quickly jump down to SPX. So that was 62. So about 6 points. Okay, so that's a couple of ways of doing that, and I trying to get most of my stuff done, the important stuff done before the open. And I just talked about the important stuff, focusing first on the indices and then the stocks that I like to trade. Okay, that is all I have for today. I'm over time, so I'm going to wrap it up. Thank you everyone for watching. Thanks for your questions and comments, and have a great weekend, and I will see you on Monday. Thanks again. Bye.